Good day, colleagues, and welcome to my final quarterly update to you in the business. This is for the first quarter of 2019. I'm going to give you the rundown on how we're seeing the global economy developments with regards to monetary policy, as well as what we expect to see in the local economy. Firstly, let's start off with the global economy. We've been speaking for some time around how the global cycle has been slowing. And in fact, if we have a look at the IMF's latest World Economic Outlook that was released during April of 2019, we can see that they have rationalized their expectations for global growth lower. So they see the global economy having grown at around 3.6% during 2018, and that is likely to slow down to 3.3% in 2019. Now, some of the reasons behind this is we still have lingering trade tensions between the US and China. Those haven't entirely gone away, but they seem to be reasonably well calibrated into the markets. However, we do have new tensions arising from what may look like a disorderly Brexit. For now, we don't quite know what's happening out there in the UK, and we'll need to watch those developments quite closely. Over the course of the last quarter, we also had dislocations emerging in several key emerging markets like Argentina and Turkey, and that resulted in some additional volatility coming through to the South African markets, and specifically the Rand, which tends to behave as a very high beta emerging market currency. When we come back, we have a look at one of the major changes with regards to global central banks over the last 2 quarters. In the fourth quarter of last year, we had very hawkish expectations around global central banks, and that gave way to a complete rationalization in those expectations in the first quarter of 2019. We now see market expectations pricing in no further hikes from the US Federal Reserve during 2019, and that has resulted in a significant push up in terms of global risk appetite, which has proven supportive of risk assets around the world, as well as of emerging market currencies like the Rand. What do we see happening during 2019 with the major central banks? We expect monetary policy to remain easy and accommodative for the foreseeable future, but we do still think that the market may be a little too complacent with regards to their expectations around global central banks, and we think that over the longer term, we could see a resumption in terms of slightly tighter global monetary policy as growth dynamics start to settle somewhat. So we would keep a risk flag up just to keep an eye out for that, certainly in the latter part of this year. Let's bring it back home to the domestic economy. What's happening in the South African economy? Well, we've unfortunately had to revise our full year expectations for 2019 growth in South Africa lower. We had started out the year at 1.3% expected for 2019, but given the risks that have emerged in the first quarter, specifically from the fact that we've had very extended load shedding, which does tend to detract quite significantly from production, we've had to revise that lower down to 0.9% in 2019. We now have it growing at 1.3% in 2020. And over the longer term, we start to see growth trend back up to around 2%. But I must stress that there remain very deep structural problems in the South African economy that will likely keep growth low over an extended period of time. And that is going to come through with significant fiscal pressures that we have spoken about in previous quarterly updates. We think that those over the longer term do still remain a key trigger point on South Africa. If we throw on top of that the risk of state-owned enterprise debt crystallizing onto the sovereign balance sheet, I think that the risks do still remain quite high. Keep an eye out for that. Have a look at the document. We've actually got a chart in terms of how extended the load shedding has been in this year. And in fact, in March, we had surpassed levels previously seen by May 2015, which was our last protracted load shedding period in South Africa. So that remains a drag on growth. Let's keep an eye out for that, a very significant contributor to our bearish view. Lastly, let's start to have a look at our view on the Rand. We have marginally revised our view on the Rand, slightly stronger in the outer years. So for 2019, we still see the Rand trading around the mid-14s, there and thereabouts, as we see higher global risk premium start to creep in, certainly amongst emerging market currencies, which right now do appear very compressed. And South Africa, as a high beta emerging market currency, will likely start to feel some of that pain. However, over the longer term, our forecasts do tend to correlate with purchasing power parity, which generally looks at your inflation and your yield differentials with our major trading partners. With regards to the SARB and inflation, what's happening there, just to wrap up the discussion, we see inflation remaining fairly well anchored. Inflation expectations have come down. The SARB has communicated 4.5% as I guess their preferred target over the longer term, and we're seeing inflation averaging 4.4% in 2019 and then ticking up to around 5% in 2020. The reason for that tick up is there have been some unfavorable base effects with regards to food, for example, and then later on in the year possibly fuel, which then would likely come through and provide some upward impetus for inflation. However, it's still well within the SARB's indicated 3 to 6% target range. And so one of the key changes to our forecast is that where we had previously factored in a potential hike from the SARB in the latter part of this year, we now believe that the SARB has the scope to actually go flat and will have an extended, flatter for longer interest rate cycle domestically. Guys, that's the wrap in a nutshell. There's a lot more detail in the document. So as always, I urge you, go to the intranet site, have a look at the document, read it in detail, and if you have any questions, please engage with the rest of our research team. We'll be very happy to assist you. I thank you very much for your attention.